What's up everyone? Welcome back to the channel. Before we dive in, let me hit you with something absolutely insane. Palantir stock is up over 340% in 2024 alone. That's not a typo, 340%. But here's the thing, most people don't remember. Palantir was trading under $10 just a few years ago. Some investors who got in early have seen returns that completely changed their lives. So here's the million-dollar question I want to explore with you today. Are there any penny stocks under $1 right now, trading today, that could potentially follow a similar trajectory? Now, before you click away thinking this is just another hype video, I need you to understand something. This is educational content, not financial advice. Penny stocks are extremely risky, and 99% of them will fail. But that 1%? That's what we're hunting for today. I've done deep research into 5 AI-focused penny stocks that actually share some of Palantir's core characteristics. And I'm going to break down exactly what makes them interesting, what the risks are, and whether any of them have a real shot at massive growth. So smash that like button, and let's get into it. But first, we need to understand what actually made Palantir special, because if we're looking for the next Palantir, we need to know what we're looking for, right? Palantir didn't just get lucky. They had a very specific blueprint that led to their success. The company started as this secretive government contractor, working with agencies like the CIA and the military, building incredibly sophisticated data analytics platforms. They were solving real problems with cutting-edge artificial intelligence before AI was even the buzzword it is today. But here's where it gets interesting. Palantir didn't just stay in the government lane. They took the same technology and pivoted hard into the commercial enterprise market. And that transition? Absolutely explosive. We're talking 55% year-over-year growth in their U.S. commercial market segment. Their revenue has now surpassed $2.8 billion, proving that their business model actually works at scale. So what's the blueprint we're looking for in these penny stocks? Number one, they need to be AI-first companies. Artificial intelligence needs to be at the core of what they do, not just a buzzword in their marketing. Number two, they should have some focus on government contracts or enterprise clients, because that's where the big, sticky, long-term revenue comes from. Number three, data analytics capability. They need to be processing complex data and turning it into actionable insights, just like Palantir does. Number four, ideally they have some kind of subscription or software as a service model that creates recurring revenue. And number five, they need to be early stage with massive upside potential still ahead of them. Keep this checklist in mind as we go through each stock, because I'll show you how they match up. All right, let's jump into stock number one, and this one's really interesting. We're talking about Inuvo, ticker symbol INUV. Currently trading under $1, and here's why this one caught my attention. Inuvo operates an AI-powered advertising platform called IntentKey, and they're going after the enterprise advertising market. Now, I know what you're thinking. Ad tech, really? But hear me out on the numbers, because they're actually impressive. In Q1 of 2025, Inuvo posted $26.7 million in revenue. That's a 57% increase year over year. Their gross profit jumped 41% to $21.1 million. But here's the kicker that really matters. They're targeting over $100 million in annual revenue, and they're already showing positive adjusted EBITDA, which means they're actually profitable on an operational basis. This isn't some pie-in-the-sky startup burning cash. They have a real business generating real money. So how does this compare to Palantir? Well, Inuvo has that same enterprise SaaS business model with AI at its core. They're selling to big companies who need sophisticated targeting for their advertising spend. And once these enterprises integrate the platform, they tend to stick around. That's that recurring revenue model we're looking for. The growth catalyst here is massive. The entire digital advertising industry is shifting toward AI-driven targeting and personalization. Privacy regulations are killing old-school tracking methods, so companies need smarter AI solutions, exactly what Inuvo provides. But let's talk about the risks, because there are always risks. The ad tech space is incredibly competitive. You've got giants like Google and Facebook with unlimited resources. Inuvo needs to keep innovating and carve out their specific niche to survive. But at under $1 with this kind of growth, it's definitely intriguing. Stock number two is Cycurion, ticker CYCU, and this is the cybersecurity play. Cycurion owns a cloud cybersecurity subsidiary, and here's what makes their location special. They're based in Northern Virginia's Data Center Alley. If you don't know, Data Center Alley is literally the largest data center hub in the entire world. We're talking about the backbone of the internet right there. Now let's look at their numbers. 2024 revenue came in at $17.8 million, and they posted positive net income of approximately $1.2 million. Again, we're seeing actual profitability here. not just promises. They're a small company, but they're making money in one of the hottest sectors in tech. The Palantir parallel here is really clear. Cycurion has that government-adjacent positioning with a heavy focus on security, just like Palantir started. Being located in Data Center Alley means they're right in the middle of where government and commercial cloud infrastructure lives. The growth catalyst is the absolute explosion in data center demand. AI requires massive computing power, which requires massive data centers, which requires massive cybersecurity. It's a perfect storm of demand. And Cycurion is positioned right at the epicenter. The risk here is their smaller scale and regional concentration. They need to prove they can scale beyond their local market and compete with bigger cybersecurity players. But being profitable at this stage is a huge advantage that most penny stocks don't have. Now, stock number 3 is where things get really interesting. This is Avant Technologies, ticker AVAI, and I'm calling this the AI platform play. Avant is actually working on 3 different AI-related businesses simultaneously, which makes them higher risk, but also potentially higher reward. Let me break down what they're doing. First, they have a proprietary platform called Avant AI that they're building to license to other companies who want to boost their products with artificial intelligence. Second, they're building AI-secured micro data centers. Now, these are smaller, distributed data centers with advanced AI security built right in. And third, they're developing AI for healthcare, specifically disease detection. Now, here's the reality check. Avant is pre-revenue. They haven't made significant money yet from any of these ventures, but their stock is already up 51% year to date, which tells you the market is betting on their potential. They're also developing data center management software that uses AI to optimize resource allocation and automate maintenance, which could be huge as data centers get more complex. The Palantir parallel? It's that multi-sector AI platform approach. Palantir serves government, commercial, healthcare, and more. Avant is trying to build multiple revenue streams across different AI markets. The growth catalyst is having 3 shots on goal. If even one of these business lines succeeds and gains serious traction, the stock could explode. Healthcare AI alone is a multi-billion-dollar opportunity. But let's be brutally honest about the risk. Pre-revenue companies are the highest risk investments you can make. Execution risk is through the roof. They need to prove they can actually commercialize at least one of these platforms, hire the right team, get customers, and generate revenue. Most companies at this stage fail, but if they succeed, the upside is enormous. Stock number 4 is Pixelworks, ticker PXLW, and this is the visual AI specialist. Pixelworks focuses on visual processing technology for mobile devices and gaming. Their key product is the X7 Gen 2 processor, which is driving what they call robust revenue growth in the mobile gaming sector. Now, gaming might not sound as sexy as government contracts or healthcare, but the mobile gaming market is worth over $200 billion and growing fast. Pixelworks provides the technology that makes games look better, run smoother, and deliver better experiences on mobile devices. As mobile gaming gets more sophisticated and starts to rival console quality, the demand for this kind of specialized processing is skyrocketing. The Palantir connection is that specialized technology platform with recurring revenue potential. Once a device manufacturer integrates Pixelworks processors into their design, they're likely to continue using them in future models. That creates sticky, recurring business. The growth catalyst is clear. Mobile gaming is exploding, especially in Asia. Cloud gaming is taking off, and consumers are demanding better visual experiences on their phones. Pixelworks is positioned right in the middle of all these trends. The risk is their dependence on the gaming industry cycle. If mobile gaming growth slows, or if competitors develop better technology, Pixelworks could struggle. They also need to keep innovating because technology moves fast in this space. But they have established technology with actual commercial traction, which puts them ahead of pure startups. And now for stock number 5, this one's probably the most emotionally compelling. Predictive Oncology, ticker POAI. This is healthcare AI, and specifically, they're working on personalized cancer therapy using artificial intelligence. Let me explain what makes their technology special. Predictive Oncology has built a platform that allows comparison of a patient's tumor sample against a database of over 150,000 tumor samples with active clinical testing records. Using AI, they can analyze which treatments worked for similar tumors in the past and predict which treatments are most likely to work for a specific patient. This is precision medicine at its finest. Instead of the old trial and error approach to cancer treatment, doctors could use AI to immediately identify the most effective therapy. The Palantir parallel is strong. This is complex data analytics solving incredibly important real-world problems. Just like Palantir processes massive amounts of data to find patterns and insights, Predictive Oncology is doing the same thing in oncology. The growth catalyst is massive. Precision medicine is absolutely the future of cancer treatment. The oncology market is worth hundreds of billions of dollars globally, and every major healthcare system is moving toward personalized treatment approaches. If Predictive Oncology can prove their platform works and get adoption, the revenue potential is staggering. Plus, and I want to be careful here because we're talking about investing, but this technology could literally save lives. That's meaningful beyond just the money. But the risks are significant. Biotech and healthcare companies face enormous regulatory hurdles. Getting FDA approval takes years and costs millions. Clinical trials can fail. And even with great technology, adoption in the conservative healthcare industry can be slow. The timeline from development to revenue can be very long, and most biotech startups run out of money before they get there.